Should we invest in US electric vehicle car companies? Now, before I start, please watch this video.
China has become the world's largest auto exporter.
$9,200 equivalent US dollars.
Chinese automakers are going to come here eventually, and they're going to do it regardless of if there's a tariff or not.
So sometimes you may read articles with headings such as US 100% duty on Chinese EVs come into effect, or US locks in steep China tariff hike. Some industry warn of disruption. So sometimes you come across this term called tariff. Now, tariff in simple form is simply a tax or some form of charges or duties, right, imposed by a government on goods and services which are supposed to be imported into or exported out of a country. It's used to protect domestic industry, control trade, or generate revenue. Now, let's give an example of how this works. Assuming that China produces a lot of EV cars, which is true, and the selling price of each car, right, is $50,000 US, and China is going to export their car into US, and Donald Trump decide to impose a 100% tariff. It also means that the original selling price of 50K right now double 100% is going to be $100,000 per car. So now the question is, why would any government, right, impose a tariff? There are many examples which are debatable. So for example, the pros of imposing tariffs, such as number one, is to protect domestic industry so that companies that produce cars can continue to produce cars, thus save jobs. The second one, of course, you collect tax, right, tariff, right? It boosts the government revenue. And the next one is US like to talk about this, which is on national security. For example, right, if they impose tariff of certain goods such as technology, defense material, and so on, so that they can protect their own country. So that are the pros of imposing tariff. Then how about the cons or the disadvantages? One obvious one is if there are tariff, then the consumers inside US, will have to pay higher prices for the products that they want, such as cars. And because of that, limited choices, right? Second, there's a risk of retaliation is because I impose 100% on you, you may impose 100% back to me. And overall, I think it could be a lose-lose because there will be a harm to global trade. And if you notice, years ago, since Russia has invaded Ukraine, do you notice that there's some form of disruption to the global supply chain, which is why things are becoming more and more expensive? Let me just give you some examples on how if tariff is being imposed on even components on the EV car, right, it will affect the price of the car. Now, first one, for example, the lithium-ion battery cell. Who produce this lithium-ion? Predominantly is China. So China processes a significant share of key raw materials such as lithium, cobalt, and nickel used in battery. So now the question is, does Donald Trump want to impose tariff on such products? For the second components, for motors and motor components, sometimes involve a certain rare earth elements such as neodymium as well as dysprosium. I even got problem trying to pronounce this. Can you imagine how rare that is? And of course, the third one is electrical components such as the circuit board and semiconductor. And of course, we all know even the iPhone, right, are assembled in China. So how? You want to impose tariff on them? So now the question is, if you look at some of the largest car company in the world by market capitalization. So on the left, you can see Tesla, followed by Toyota, followed by Volkswagen. So CAGR stands for compounded annualized growth rate. It's like our annual increment, you know. So in this case, Tesla, for the past few profitable years, it has grown annually at 179%, followed by 5.89%, followed by 15.61%. So now the question is, if whichever government try to impose tariffs on them, trying to charge them money, can their profit still grow at such a high rate? Most likely, no. So some people may argue that Tesla is still a good company, right? Yeah, of course. But let's look at this article. China's BYD overtakes Tesla revenue for the very first time. And the company's CAGR is 17.81%. Now, slower than Tesla, but still better than Toyota and Volkswagen. So now the question is, with all this tariff, and then with huge competition in the EV market, are such EV companies still a good investment? Now, let's watch this video to find out.
And even though there are no Chinese branded cars for sale in the US yet,
More than 100 Chinese-owned automotive companies have a presence in the United States already. They are concentrated in Detroit and Silicon Valley, and there are Chinese auto suppliers scattered across 30 U.S. states.
But you'd never know it because we don't see Chinese cars on American roads, so it doesn't occur. No, what? That can't possibly be true. But it is. They're here. They're getting ready for the time when it's right to enter and sell their cars to Americans.
So I want to hear your thoughts about investment in EV car companies. Are you interested in such companies? And if you are really interested, which car company would you invest in? Please comment on this video politely and respectfully. I shall see you soon in our next video.